Alright, so let's dispel some business funding myths before you guys get this up and going. So there's lots of different myths of people who typically don't know or aren't experts in how to obtain business funding, telling you reasons why they got denied, and thinking that that is the same for every single person. So the goal of this video is just to quickly dispel 8 myths that are just not true for you to acquire some level of business funding. The first one, you need to be making money to get business funding. Now, every single application for business credit cards that I'm showing you will typically end up being what's called a no-doc loan, meaning that they don't need any income verification in order to approve you for this lending. They're projecting lending for the course of the year and basing your approval on that. So because of that, you can get funding for a business that has not made $1 yet, as long as your personal credit is in position to do so. Another one, not every bank is going to approve you for lending. They all have different criterias. If one bank tells you no, that does not mean that there isn't a bank that will lend to you. It also doesn't mean that that bank might not lend to you in the future. Lots of banks can change quarterly on whether or not they're giving out lending, whether they're going to be more or less lenient on business credit cards, no-doc loans. All of that is, really calculated on the internal side. So, what's working now, might not be working in 3 to 6 months with a lot of these banks. They're all going to shift and flow. They're businesses that adapt, right? So if one bank denies you from something you saw on this video, does not mean that you should stop there, that there is no other bank that can approve you. Now, another one, you can't get funding for a brand new LLC. You can get funding for a brand new LLC. All of the applications here in this course work for brand new LLCs, or the vast majority. Some banks will deny you for being too new. That is a realistic reason to get denied, but it's not true for every single bank. So while you will see significantly better results from an older business, brand new LLCs can still get funded as long as your personal credit is in position to do so. You can just expect probably closer to 50 to 75% of the results as if your business was 2 years old. So myth 4, you need to build business credit before you can get funded. You don't need business credit for practically any funding. It does allow you to take larger lines. It does get you better interest rates in the future, and it can be a denial reason if your business credit is bad. But you don't need to actually physically build business credit like you do personal credit if you're personally guaranteeing the lending. It's going to be based upon your personal credit score. So that's the most important thing that you build up. You don't need business credit. You don't need to spend $25 for Uline and Granger and all of those kind of things to go and get approved for lending. They are not going to be huge factors in your approvals for anything inside of this course. You need to have an existing relationship with the bank to get funded. There are lots of banks that will give you a business credit card without you having to even open up a checking account. So you can get funded without having previous relationships with these banks. Now, do those relationships help to get you more funding? They definitely do for the vast majority of banks. However, it's not a necessity to have a checking account, throw in a bunch of money inside of it. Although it can, for some of the banks, it's definitely recommended that you do so. Your business needs to be a specific industry to qualify. Now, while there are industries that can get rejected due purely to banks not lending to those industries, you can reposition your business in order to get it funded within your industry by just simply understanding the best way to present your particular business in order to get lending. So when they classify you, they're talking about your NAICS code that I have another video on. And what that is a 6-digit code that classifies your business into one kind of 3-word description. And if you are somebody who runs a business, you probably know that your business probably isn't something you can classify into one, 2, or 3 words that easily. So make sure that you understand, which NICE code is the best code for you to have for your particular business so you can get approved. One, you should avoid personally guaranteeing business loans. Now, this is kind of ridiculous. Honestly, you're not going to get a whole lot of lending that's worth using if you're not willing to personally guarantee some business lending. So these non-personally guaranteed loans, these are typically kind of factoring agreements, MCA type debt that takes 3-4% fees out of the money that you get. So they'll add on 3 or 4% to every single payment, leading you into 30, 40, 50 plus percent interest loans if you calculate it over the course of a year. So if you're not personally guaranteeing a loan and your business makes less than $10 million a year, just expect to personally guarantee anything that's going to be worth using for you. So get into that spot. Your credit does need to be in good position to get the best lending. But you don't need perfect credit, right? So if you have a 720 credit score and a credit card with a $10,000 limit, you can start getting approved for some business lending. Now, you'll get significantly less if you do not optimize your credit first, and there's definitely a minimum that you need to hit in order to get approved. But it doesn't have to be perfect. You don't have to be coming up here with an 800 credit score with a bunch of credit cards and being 50 years old with a bunch of built out credit to come through. I've gotten funding for 19-year-olds to come through. So while there are tips and tricks to the game to come in to get your credit in the position where it's at least minimally fundable, it does not have to be 100% perfect. And those are some myths that just wanted to expel before you guys start funding, just so that you guys are in position to go and get yourself the most lending that you can.